Video will be an introduction to accounting basics. Today, I will be introducing the elements of accounting. Now, what is accounting? It is the art of recording, classifying, summarizing, and communicating business transactions in monetary terms. This is the definition that is required by your examiner. The keywords that you must write to score marks have been highlighted. Now, the question arises, what is a business transaction? It is a business function performed by two individuals. Every transaction has two effects, debit and credit. From here on out, I want you to listen carefully. We use the word debit to describe an increase in our assets, expenses, and losses. Alright? It goes on the left side of your T account. Credit, on the other hand, is an increase in your revenue, liabilities, capital, and profit. It is on the right side of your T account. To make it simpler, think of your debits and credits like a basketball team. One team is called debits and the other team credits. Asset, expenses, and losses are on team debit. Revenue, liabilities, capital, and profits are team credit. Memorize your debits and credits, alright? Now moving on. What's the purpose of a business? It sells goods and services to earn a profit. Accounting terms, sales is when you purchase a good with the intention of earning profit and earn a profit on that sale. Such a transaction or exchange is known as sales of a business. There are two types of sales. Cash sales, where cash is paid on spot when goods are exchanged. The second, credit sales, is when goods are sold but cash is paid at a later agreed date. Credit sales result in our accounts receivables. This is when, in the case of credit sales, the person whom towards sale is conducted, or in simpler wording, the person who buys your goods on credit basis, that person is to be known as your accounts receivable. Revenue, it is generated through the sale of goods and services. It is your income. Moving on towards our fundamental accounting elements. What are assets? Asset is anything owned by a business. It is your possession, your belonging. Assets can be further classified into non-current and current assets. Non-current assets are in a business possession in the long run. They are in the business possession for more than a year. For example, a delivery vehicle. A business can use it for as long as possible until it becomes useless. Current assets, these are a business short-term assets and are used within an year. For example, cash. Assume you have 1,000 rupees. You'll end up spending it, right? You won't be able to keep that 1,000 rupees for an entire year without spending it. Other examples of current assets could be inventory and trade receivables. On to the second element, liabilities. It is what is owed to others. It is not your possession. You merely borrow from organizations or other businesses. Liabilities are split into two, non-current and current liabilities. Current liabilities are short-term liabilities. These amounts are paid off within a year. For example, your trade payables, which occur when credit purchases occur. Now, when it comes to accounting terminologies, what are purchases? It is when goods are bought for resale. Credit purchases are when goods are bought but amount is to be paid later on. Similarly, cash purchases is when cash is paid immediately in exchange for goods. Just as we discussed for trade receivables, the same goes for trade payables when it's the case of credit transactions. Now, back to trade payables. The person from whom we bought goods and are supposed to pay later, that person is our accounts payable. Now on to our non-current liabilities. These are your long-term liabilities. The business has to pay these at a later date, which can be more than an year. For example, any loan you take from a bank. Capital is also your non-current liability. This is the amount invested by the owner to run the business. Now I want you to think of the business and owner as two separate entities. The owner puts money into the business and the business gives it profit, correct? Now the business is obliged to keep paying its profit to the owner rather than saving up and, growing the business. So in this way, the owner is someone the business is liable towards. Another important term you need to know is drawings. If an owner takes more than the profit from the business, then these are the owner's drawings. Drawings is the amount taken by an owner from the business for personal use.